Hello everybody. In this video, I will be answering some questions that I found on the RobinHood subreddit. Let's get started. So here's the first one. Account questions worried about selling shares. I have a quick question about account types. There's margin and cash, and currently I have mine set to margin. I also currently have margin lending turned off. My question is, when I sell shares of a stock and it goes back into my buying power, individual cash, is that then safe from liquidation or any sort of the big man can take any out? I'm worried about selling shares and wondering, since I'm set to a margin account, if the money from the shares can be messed with. Still learning a lot about all of this, and I don't want to switch to a cash account willy-nilly because then I can't sell the shares for 5 days. So if they go high, I'll miss my chance. Reminder, I have my account as margin, but margin lending is turned off. Thank you. So if margin lending is turned off and you're not using any margin, that means you should be safe. When you sell your shares, you're not going to have to worry about any sort of liquidation or, big man taking the money out or the money being messed with. Even though it's a margin account, if you're not actually using the margin at all, and if it's as you say, margin is turned off, then I would say your cash is safe when you're selling the shares. You have nothing to worry about in this situation. Okay, here's the next question. Why is the order still pending? I'm confused. And then there's a screenshot right here. Let's take a look at the screenshot. So this is the order, buy GME, GameStop, $30 call, expiring on 5/17. The bid is $9.50. The ask is $10. So the bid, that's on the buyer side. That's what buyers are willing to pay. The ask is on the sellers. That's what sellers are willing to sell it for. So the highest price that buyers are willing to buy it for is $9.50. The lowest that sellers are willing to sell it for is $10. So I would say an average price of $9.75 between the bid and the ask. So this option, right, this GME $30 call expiring 5/17, it's worth around $9.75. What is this person willing to pay for it? As you can see, they set a limit price of 43 cents, which means this particular person is willing to buy it for only 43 cents. However, it's worth $9.75. That's like trying to buy a Lamborghini for like $1,000. It's worth much more than that, but you're setting a limit price that's like nowhere near what it's actually worth. This call option is worth, like I said, an average price of $9.75. But this person is putting in a limit order for 43 cents. That's much, much less than $9.75. So of course, obviously, this order is not going to fill, because what the call option is actually worth and what they're setting their limit price to is so completely different from each other. The limit price is set to only 43 cents. That's way, way too low for what this GME $30 call is worth. So yeah, that's why it's still open. If you actually want the order to fill, you have to set your limit price much higher, like around $9.75. You'll have a much better chance of the order actually getting filled rather than pending. Okay, here's another question. It's similar to the last one we just talked about. It's about limit pricing. So the question is, will this sell put execute at the second limit price, or is the first price better? Do either of these sell puts seem profitable? 19, looking for trading advice. Alright, so we're talking about limit orders again. Let's take a look. So here we have sell LTRX $5 put expiring 6/21. And here's the bid and the ask. Bid is $1.40, ask is $1.60. So buyers are willing to buy it for $1.40, and then sellers are willing to sell it for $1.60. All right, and he put $1.50, which is in between these two, which is a good idea. All right, let's look at the next one. So same order, selling LTRX $5 put, expiring 6/21. And same bid and ask as before. Bid is $1.40. That's what buyers are willing to buy it for. and then the ask is $1.60, which is what sellers are willing to sell it for. He put $4.90. So this person is trying to sell this option for $4.90, but buyers are only willing to pay $1.40 for it. Now think about this. If buyers are only willing to pay $1.40 for something, and you're trying to sell it for close to $5, obviously, most likely, they're not going to buy it for $5 because they're only willing to pay $1.40 for it. Not only that, but again, the ask is how much sellers are willing to sell it for. So if other sellers are willing to sell it for $1.60, why would they pay $5 for it? They can get it from other sellers for $1.60. Since there are other sellers willing to sell it for $1.60, if a buyer really wanted to, they would just buy it for $1.60, as opposed to $4.90. There's no reason to buy it for $4.90 when other sellers are selling it for less. So no, this order will not get filled, in my opinion. The bid and the ask, $1.40 and $1.60. $4.90 is outside of this range. Usually when you put a limit price that's outside of the bid and ask range, it's not going to fill. So no, I don't think this is going to fill. He should go with this first one where he put $1.50. $1.50 is between the bid and the ask price. So because of that, this limit order is a much better choice if you actually want your order to be filled. So this one is much better. Yeah, the original question was asking, will the sell put execute at the second limit price or the first price? And I think the first price is much better. Okay, here's the next post. New 19-year-old investor looking for advice. Just started investing in my Roth IRA this year with a pre-made portfolio. Any advice would be greatly appreciated. Unsure if these ETFs are even any good. First of all, without even looking at the screenshots or the pictures, 19 years old, investing already? That's already really good. I mean, if you're investing at 19 years old, that means you have a ton of time for your portfolio to actually grow. So it's really good, even without even looking at what he's investing in. Just the fact that this person is investing at 19 years old, that's already really, really good. Okay, now let's look at his actual portfolio. Roth IRA, $2,627.88. So Roth IRA, that's a tax advantaged account. Basically, your portfolio grows tax-free over time, and then once you withdraw it during retirement, then you won't have to pay any taxes on it when you withdraw the money. So it's a very tax-advantaged account. Okay, let's look at the positions. So we have IJR, VWO, SPMO, VEA, VONG, IVV, BND, and VOO. I think this is a good portfolio already. I personally think that this is a great portfolio for a 19-year-old. And if he just holds on to this and waits for a few decades, he's going to end up gaining a lot of money over time. Let's see what the next picture is. Stocks and ETFs, weekly buys. Okay, so he has weekly recurring investments on these positions as well, which means he's dollar cost averaging. I think this is a really good setup for success for a 19-year-old. He has a bunch of ETFs in his portfolio, he has weekly recurring buys for them, and he's investing at such a young age that there's so much time to grow. So yeah, this is a great portfolio already. Now all he needs to do is just sit back and wait for many, many years. I'm thinking 30 years, and then he'll have a lot of money at the end of that time period. It's been proven, statistically speaking, that the best way to make money for the general public, the average person, to just invest in ETFs and just sit back and wait for years and years. And then over time, you're going to have really good average returns compared to even hedge fund managers. So yeah, I think this is really good portfolio setup already for a 19-year-old. Alright, I think that's enough for now. That's all I wanted to do in this video, is just go over to the RobinHood subreddit, look at some posts, answer some questions, offer my personal advice on some things. I hope you guys enjoyed watching this video. Please like and subscribe, and I will see you guys in my next video. Thank you so much. Bye.